would be the most honest thing to do because that would actually provide accurate information. But that is far from what they're actually doing, which is essentially providing fabricated information to the public. They don't want you to think that inflation is as bad as it really is. Inflation is a very serious problem we're dealing with right now in America, and unfortunately it seems like it's only getting worse every month that goes by. Now this month is no exception because according to the latest reports, inflation is up over 7% year over year, which is the largest increase since June of 1982. Now what if I was to tell you that as bad as that inflation is, it's actually much worse? Well, unfortunately that's the truth I'm going to be sharing with you today. You see, the BLS, which publishes inflation data, has been able to manipulate their statistics in order to make inflation look a lot better than it really is. So before I go any further, do me a favor and support the channel by smashing that like button, and if you haven't already done so, definitely subscribe and hit that notification bell to watch more content like this. And with that said, let's jump into it. So we all know by now that inflation is a serious problem in America. The latest numbers show us that inflation as a whole is up over 7% year over year, but some goods are experiencing inflation worse than others. For instance, eggs are up over 11% year over year, furniture is up over 14%, utility gas is up over 24%, used cars are up over 37%, and gasoline is up almost 50% year over year. Well, the Fed has finally come to realize that inflation is a serious issue, and so because of that, they finally admitted that inflation is no longer transitory, and they've also come up with a plan for 2022 to start combating inflation. This includes things like raising the federal funds rate 3 times in 2022, in addition to doubling the speed of tapering their bond purchases. Well, it was just decades ago that many economists believed that 0% inflation was the most ideal situation, but more recently economists believe that a little bit of inflation is actually the best way to go for a thriving economy. You see, a lack of inflation actually causes a lot of problems for the consumer. For instance, if you were to see prices go down, you would probably see wages go down as well because the companies wouldn't be making as much money anymore. In that same line of thinking, if deflation took place, then people who borrowed money would have a much harder time paying back that loan, especially if wages are going down on top of that. Deflation also discourages spending and investing, which overall just hurts the general growth of the economy. Now, a little bit of inflation is actually a good thing because it encourages people not to hoard their money, because if they were to do that, it would actually lose its value. You see, the dollar has actually lost 96% of its value since 1913, and that's mainly due to inflation. So people won't want to hoard their money if they know there's inflation at play. But in addition to that, it also encourages people to spend their money and also invest their money, which is great for growing any economy. Well, in 2020 alone, the Fed printed so much money that we printed over 20% of the entire US money supply. Take that and couple it with a major supply chain crisis, and that is why we're seeing inflation going up at rates that we haven't seen in literally decades. So now the Fed is in a bit of a predicament. You see, on one hand, if the Fed continues to raise interest rates, it risks collapsing the entire financial system. On the other hand, if the Fed continues to print money in order to prop up the market, it only continues to dilute the dollar, which furthers the inflation crisis we're experiencing. Well, the Fed has made it clear what their intentions are for 2022, but it is very important to look at what they actually do versus what they say. You see, they've already admitted that inflation is no longer transitory, yet they're still waiting to do anything about it. They still have these 0% interest rates in place, regardless of the fact that they know that we're in a serious inflation crisis. Now, I do understand they're tapering their bond purchases a little bit faster than before, and they're also raising their interest rates a little bit higher than they originally planned, but I thought that Peter Schiff actually had an interesting perspective on this topic. He said it's as if the Fed started a fire, then started pouring gasoline on it. That would be buying all the mortgage-backed securities and Treasury bonds. And then eventually when they realize there's an inflation crisis, there's this massive fire going on, rather than just pouring water on it, they're just pouring a little bit less gasoline than they were before. But as bad as this inflation crisis seems, unfortunately, it's actually worse than we think. You see, the CPI data, that's the Consumer Price Index, is not even that accurate. Realistically, realistically, we're looking at a much higher number than what's actually being reported right now. One of the best examples of this is cost of rent, and I found this information fascinating, especially being a real estate investor. You see, if you've been keeping up with what's going on in the rental market, all the publications have been reporting anywhere from a 10 to a 15% increase in the last year alone in rent. Now, at the same time, the Bureau of Labor Statistics reports only a 3% increase in rent. So how is that even possible? Well, the problem is the way they're actually gathering their information. You see, on one hand, you might think that maybe they're reaching out to property management companies, or maybe they're looking at sites like Zillow and Realtor.com, where people list their homes for rent, maybe average the area out, check back a year later, what's the average now? What they really do to collect their information is they call up random people, not landlords, not property managers, just random homeowners, and they ask them, they conduct a survey asking them, if you were to rent out your house, what would you choose to rent it out for? The problem with this is the average homeowner doesn't have a clue what they could rent their house out for. They have no experience in the real estate industry. They're not property managers. They've never rented their house out before. So how would they have a good idea of what it could rent for? Especially considering the massive rent growth that's taken place, it's not a surprise that they severely underestimate the amount of rent growth that's taken place. So anyways, they take the average of all these homeowners and what they told them, and they compare it to what they said last year. And that's the way they gather their information. They're not talking to realtors, they're not talking to property managers, they're not talking to landlords, people that actually have their hand in the industry and actually understand what houses can rent for. They're talking to random people that have no experience. So this is obviously not a great way to gather information for accurate inflation data. So I guess this works in the government's favor, making it look like they have inflation under control a little better than they really do, because in actuality, rent is about 25 to 33% of people's income. So if that's going up at a rate of 10 to 15%, you can imagine what that does to the entire inflation data. So when you realize where we are currently with our inflation situation, it should be even more incentive for you to get started investing your money and try to hedge your money against inflation to protect the value of your dollars. Now, there's multiple ways to do this. I mean, you can use stocks, you can use cryptocurrency, but my favorite way to do this is hands down real estate, because not only is real estate outperform inflation in terms of price growth, but in addition to that, you have the ability to borrow money at low fixed interest rates. Now, I'm not talking about any type of real estate. I'm talking about cash flowing real estate that pays you money every single month. You make money by owning that real estate. And what that does is not only do you make that money by owning real estate and you're hedging against inflation, but you're essentially getting paid to borrow money because interest rates are so low compared to what inflation is at. In addition to that, you have the ability to leverage safely with real estate in the sense that you don't get margin called like you could with stocks or cryptocurrency. You can control $100,000 of real estate for every $20,000 you put as a down payment. So if you bought an investment property for $200,000, you would put down $40,000, but you get the appreciation on the full $200,000. Now, if this is your first time visiting the channel, the good news is that I actually teach a lot on how you can get started in real estate investing on this channel and how you can change your entire financial future by doing it. So anyways, I hope you guys enjoyed today's video. If you feel like you gained any value today, do me a favor and support the channel by smashing that like button. And if you haven't already done so, definitely subscribe and hit the notification bell if you want to watch more content like this. Also, let me know what your thoughts are on this inflation crisis in the comments below. I'd love to hear your thoughts. Finally, follow me on TikTok and Instagram at The Out of State Investor. Thanks again for watching, and I'll see you on the next one.